Holy smokes, folks. I just received an email that tells me everything that I need to know. Now, granted, we don't need to further discuss how important it is for us to pay attention to the information and the news that is being reported, the events that are happening around the world, because of the pressing reasons behind why we should all be preparing for what is happening, folks. And this email right here tells me everything that I need to know this morning that further solidifies the points and the actions that I'm taking to make sure that my family is prepared, make sure that you guys are aware of this information and you guys can prepare as well, make sure your families are prepared, and further pushing to make sure that my personal and business finances are in order, because we are about to see a blow to the economy potentially, but also we're likely to see an opening of opportunity coming here really soon, folks. I got some really important things that I want to share with you about some future changes coming possibly to the channel, perhaps maybe our surroundings, maybe our studio, as we would call it, as we are seeing some real strong signals from the housing and real estate market here in Florida, which is making us really excited about the plans that we have put in place about a little bit over a year ago to put us in the position that we are in now, to make sure that we're capable, ready, and able to capitalize on these opportunities with these shifts and changes in the market. Now, like I said, this email is very telling, but it says most Wall Street CEOs have been known to lay people off when times get tough. Folks, it's beginning to look like the strike is still coming. Strikemas is what they're calling it in the UK. UK Rail Union plans extra December strikes. This is crazy, folks. The Biden administration is breathing a sigh of relief after managing to avert railway strikes last week. But on a parallel track, the UK is on a runway or runaway strike train. The UK's biggest rail union, the National Union of Rail, Maritime and Transport Workers, RTM for short, announced a planned strike action from Christmas Eve until December 27th, continuing a long-running battle between the union and an alliance of the rail companies and the UK government. With healthcare and postal workers also planning strikes, this Yuletide prime minister is probably dreading a visit from a trio of festive ghosts. So, folks, possible rail strike, possible healthcare strike, possible postal worker strike in the UK. Obviously, yes, we have viewership from around the world. I do appreciate that. Thank you guys so much. If you haven't, give this video a like and subscribe to the channel. Turn on notifications so you're alerted when I do post new videos. I'm trying to bring you a broad spectrum of everything that's happening and going on around the world, because they will have impacts to us all. Trust me. But these folks are not playing. Christmas Eve to December 27th, they're sending a clear message. They're sending a clear message about what is most important to them, and these folks better listen up. FTX's downfall doesn't scare Goldman Sachs. Okay, that's interesting. Goldman Sachs to invest. Now, this is according to this is crypto news. So Goldman Sachs to invest millions into crypto. The Death Star of global finance is starting to have a good feeling about crypto, even if no one else does. This is very interesting. Goldman Sachs plans to spend tens of millions buying or investing in crypto companies. And according to reports by Reuters, the FTX implosion didn't flatten the crypto market, but it definitely made it significantly less crowded, which is just the way Goldman likes it. And folks, allow me to clarify, or maybe something that I have misspoke about on a previous live stream when I was bringing you guys an update and some information about FTX, Steph Curry, Tom Brady, the city of Miami. Like, there were so many people involved with this implosion of SBF, or Sam Bankman-Fried, and this multi-billion-dollar loss for the FTX. And I wanted to make sure that I clarified the point of the video wasn't to provide an explanation of centralized exchanges and decentralized exchanges in regards to cryptocurrency. The point of the video was to explain to folks the severity of the situation and how so many people are being impacted and affected by the loss, ultimately directed by Sam Bankman-Fried and his choices and his actions. I'm not here to provide you with cryptocurrency knowledge and experience, because that's just not my area of expertise, not yet. So if anybody out there has any gripes with, a centralized exchange or a decentralized exchange, the FTT token or Bitcoin or whatever it is, the point of the matter is that, folks, please do not get involved. Do not heavily invest in something you do not fully understand. Also, me personally, I would never invest my own money, especially a large portion of it, in something, or at least one thing. Any investment I make, I have to be willing to lose that money altogether. So that's the point. I wanted to share that with you guys so you're aware. If you want to know more, if you want investing for beginners, saving money for beginners, anything like that, comment down below, let me know. And you're more than welcome to come on over and join the Patreon and join the network, patreon.com/Kevin247. And we are discussing these things all day, every day, folks, making people money. That's what we got to do. Now, it says, how the mighty have fallen. Wall Street's biggest banks have been playing their own interpretation of Hamlet for almost a decade when it came time to be or not to be involved with crypto. Goldman Sachs has been, on average, less afraid than its peers of whatever spirits lurk in the blockchain, with CEO David Solomon telling CNBC last year that while he's not a huge fan of Bitcoin, the key thing is how can blockchain or other technologies that are not developed yet accelerate the pace of the digitization of the way financial services are delivered. The mega firm has even had a digital asset group since 2018, and those investments were all made before Armageddon struck the $2 billion crypto exchange FTX and its once seemingly competent, if incredibly awkward CEO, Sam Bankman-Fried. Now, it says here that FTX, of course, filed for bankruptcy after it was revealed SBF allegedly used billions worth of FTX customer funds to bail out his tanking crypto trading company Alameda Research. The monumental meltdown has torpedoed the value of cryptocurrencies, spurred more fervor for Congress to implement stricter crypto regulations, and left a bad taste in many investors' digital mouths. These folks have a way with words, don't they? But as the saying goes, forget it, Jake, it's Goldman. Populist panic is where the lords of 200 West Street see real opportunity. Pay attention, folks. It says now, while a few million is a drop in the bucket to the legacy investment bank, which earned $21.6 billion last year, it's a signal of Goldman's bullishness on the crypto market. Details are scarce, but digital asset head Matthew McDermott told Reuters Goldman plans on investing in crypto opportunities priced much more sensibly. Goldman has invested in 11 digital asset companies that provide services such as compliance, cryptocurrency data, and blockchain management. And last week, it launched a digital asset platform and issued a $104 million digital bond for the European Investment Bank. FTX was a poster child in many parts of the ecosystem, McDermott said, but to reiterate, the underlying technology continues to perform. So, folks, Motley Fool says that the two keys to potentially building wealth, one, identifying and investing in undervalued stocks. Two, waiting. Folks, if you want to invest in stocks, click the link. Moo link in the description. Motley Fool did not say to invest with Moo. I'm saying there's a link in the description if you want a investment brokerage app. Check the link in the description. Number one, identifying and investing in undervalued stocks. And two, waiting. They're asking, is this the most exciting strategy to make you millions? Probably not. Does it work? They say yes. So I would agree with them. Again, like I said, me personally, I prefer to buy and hold. I'm not looking to get in and get out very quickly or rapidly in the stock market. I want to continuously build wealth, continuously build out my portfolio, continuously increase my net worth, and further solidify my financial situation, adding diversity while producing cash flow producing assets and diverse income, passive income streams through some of these stocks that provide dividend payments, payouts, and other things of the sort. Now, if you guys got any questions, you want to know more about this, please let me know. Drop a comment down below. Share this video. I would appreciate it. Subscribe to the channel if you haven't already. Check the links in the description and come on over and join the network if you want to be around like-minded individuals who are working towards achieving goals, towards reaching success, building businesses, creating building assets, ultimately trying to hedge against the Fed, which is against inflation and higher interest rates that are ultimately driving down the wealth earning ability of many Americans with higher debts and interest payments on credit cards and borrowed money. We want to build money. We want to save money. We want to invest our own money so we are not a slave to the system. You guys take care. Be safe. I'll see you on the next one. Bye.